Hello everyone, welcome back to All Financial Discussion channel. For this video, I'd like to continue the series of discussion on CPF. This video, in fact, is actually a request from one of you guys. You guys actually request to have a detailed discussion on CPF interest. So this video, I will have different scenario to show it to you how to compute your CPF interest before age 55. I will do another video after age 55. So this is the key objective of this video. This slide shows the CPF base interest rate. So from here, you can see that OA will be able to earn you a base interest of 2.5% per annum, while the rest account, SA, MA, and RA, they allow you to earn 4% per annum. So like I mentioned earlier on, this video, I will concentrate for CPF member that is actually below 55 years old. So below 55 years old means that I still have the SA account. One thing to note that there will be an additional 1% okay, on the first 60K of combined CPF balance. And basically the OA will be kept at 20K. So let's take a close look how to compute the interest rate. Next, I like to do a quick summarize how to compute the interest rate for CPF members that are actually age 55 and below. Okay, so let's get started with the base interest first. The base interest calculation will be quite straightforward. So later on, I will have example to show it to you. I think slightly complicated will be this, the additional interest rate. So how they actually distribute this additional interest rate. The first one will be from the OA first. Keep this in mind. This is actually for age 55 and below. So the first cut of extra interest will be from the OA first. If you still remember, OA only has the maximum of first 20K. So next will be the SA followed by MA. Okay, so basically this is the sequence how to compute the extra interest from the different account. From the OA first, followed by SA, and then MA. Next, a quick summarize for CPF interest rate calculation for CPF member that is actually age 55 and above. Okay, so I will do a detailed discussion on my next video, okay, for members that is actually age 55 and above. But over here, I just want to quickly highlight the key difference between age 55 and below and age 55 and above. So from here, you can see that for age 55 and above, the first cut for extra interest will be from RA, followed by OA. Again, the OA will be kept first 20K, next will be followed by MA. You can see the clear distinct difference. For before, it's actually OA first, followed by SA, and then MA. But for member that is actually after age 55, RA will be the first account to earn the extra interest rate, followed by the OA, which is kept at 20K, and then next will be MA. Let's come to the example in order to understand better. Let's come to the first example, how to compute the CPF interest rate for member that is actually below 55 years old. Let's assume the member actually has this account balance for OA 60K, for SA 40K, and for MA 10K. So basically, let's start with the base interest. Okay, so the base interest for OA will be 2.5%. So for this 2.5% of 60K, you will earn 1.5K. And this will be the interest rate from the OA account. And this amount, 1.5K, will credit to OA account. Next, same for SA and MA, they are able to earn a base interest of 4%. Let's say that if you take this 4% on this 40K, this will give you 1.6K. Same for MA, 4% on 10K, this will give you $400. So again, from here you can see that this SA 1.6 will be deposit, the interest will be deposit to SA, while the MA earn an interest of 400, and again, this amount will also credit to MA. Next, let's come to the additional interest. Like I mentioned earlier on, the base interest is actually quite easy to compute. Now, let me come to the additional 1%. So for the additional 1%, for member that is actually below 55 years old, OA will be the first one. But for this case here, the OA is only the first 20K. Next will be followed by SA, and then followed by MA. So basically, this is what I mentioned here. So for the first 60,000 of your combined CPF, okay, and then basically OA will be kept at 20K. The extra interest, I like to highlight this. This extra interest, okay, let's say that for this case here will be the additional 1% that you actually earn on your OA. They will not be able to credit into the OA. So instead of that, they in fact will be credit to SA, not your OA account. Okay, so I will give you an example to let you understand better. So basically, this will be the extra interest rate. So basically, for this case here, OA will be the first one. Only 20K will be able to entitle this additional 1%. So basically, this extra 1%, okay, basically for this 20K, I will be able to earn 200. Okay, basically, this will be the additional extra interest. But in this case here, you can see that this interest will credit to SA rather than OA. So basically, this is one thing that I like to highlight. Next, for SA, basically this 40K, if you still remember, only the first 60K. So therefore, only 40 plus 20 from the OA will be able to enjoy the additional income on the interest rate. So basically, this will be the extra interest rate, 1% of 40. Basically, they will earn you $400. And this amount of interest that you earn, they will be able to credit to SA. So basically, this is the key difference. As I have used up all the first 60K, so therefore my MA will not have any additional interest. So basically, let's me do a quick summarize. This is what I have initially, as you can see from here. OA, I have 60K, SA 40K, and MA 10K. So basically, these are including the interest. Okay, so basically for OA, you can see that I have additional 1.5K. So basically from this 60, I will have OA, an increase of 1.5K, the interest that you earn. Okay, so basically this is for the OA. How about SA? Okay, so for SA, initially it is actually 40K, but over here you can see that this will be the interest that I earn, 1.6, and then another additional interest of 200 will also credit to SA, and also another additional so-called interest that I earned by SA, 400. So in short, I have this interest credit to SA, 1.6K plus 200 plus 400, which is 2,200, as you can see from here. So basically, this SA include the extra interest that is actually earned by the OA. So basically, instead of credit into OA, it is also credit into SA. So therefore, for SA, I have this 22.2K will be so-called my amount in the next month. As for MA, okay, I will only enjoy the base interest, okay, which is 400. So basically, you can see that MA actually from 10K become 10.4K. So this is actually case number one. A quick disclaimer, I am not a licensed financial advice. This video is for entertainment and education purpose only and should not be considered financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, let's continue the discussion. But before, I would like to urge you guys to help me by like this video. When more of you guys actually help me to like this video will have a better chances to reach out to a larger audience. So guys, help me press the like button now. For those who are new to this channel, and if you have learned something from this video, hope you can support me by subscribing to this channel and turn on your notification bell. Once again, thank you so much for strong support. Let me explain the computation of interest rate. Again, target those CPF member that is actually below 55 years old. So this will be case number 2. In general, you can see that the amount in the respective account actually reduced. Okay, so MA, I just keep it the same, but OA and SA, I actually reduce the amount. So again, the first thing to do will be the computation of the base interest. So quite straightforward. Okay, for OA, the base interest is 2.5%. SA and MA will be 4%. And from here, you can easily compute the interest that is actually earned as the base interest. And from here, you can see that OA earn a base interest of 250, and this 250 will credit to OA. Same for SA. Okay, so basically for SA, 20K with a base interest of 4%, this will entitle this interest of 800. Again, they will also credit to SA to the respective same account, same for MA. So I always mention that the key criteria will be the extra interest rate. So for member that is actually 55 years old and below, the first extra interest will be at the OA and maximum cap at the first 20K, followed by SA and then MA. So let's take a close look. Okay, so basically, this is actually the extra computation. Okay, so the extra income from the interest for OA. Okay, basically for this case here, I only has 10K in the OA account. If you still remember, for OA is maximum 20K. But for this case here, let's say I only has 10K inside the OA. So this 10K will have this extra interest of 1%, okay, which means that I will earn $100 from this additional interest. Okay, but over here you can see that instead of credit to OA, I actually credit this $100 to SA. So next, okay, so will be the 20K, okay, so which is from the SA account. And again, okay, the additional, okay, since it is so-called lesser than 60K, so all my SA account will be able to enjoy another additional 1%. Again, from here, you can see that I have compute this additional 1% of 20K, which is $200. And again, this $200 interest, okay, the extra interest will be credit to SA. Last but not least, since I have not fully so-called covered the first 60K, my MA account will also able to enjoy the additional interest. So from here again, I will compute the extra interest that earned in the MA, which is $100, and this $100 will credit to MA. So next, let me do a quick comparison on the before and after effect. Okay, so this is what I have before effect here, which is 10K at the OA, 20K at the SA, and 10K at the MA. So what happened here is basically for OA, since over here you can see that this 250 is actually credit to OA account. So therefore for my OA, I actually has this 10.25K basically in my OA account. As for SA, is slightly so-called complicated. It's actually not complicated with this example you can see from here. I have this 800, which is the base interest that is earned by SA. And again, from here, you can see that actually I have another one, okay, which is supposed to be credit to OA, but since this is extra, so therefore they also credit to SA. So from here, you can see that I will have this additional of 800, 100, and 200 that is actually credit to my SA, which means that, okay, the total interest earned will be 1,100. So from here, you can see that these are the additional as compared to the starting balance. Next will be the MA. Okay, so for MA, I have this 400 credit to my MA, and this $100 will also credit to my MA. So over here, you can see that for my MA, I will have 10.5K. So basically, these are the two cases how to compute your CPF interest rate for members below 55 years old. I need to highlight this. This is for members that is actually below 55 years old. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.